Okay, folks, welcome to Sunday Night Futures Live. We have the futures action upon us. The new trading week is here. And we're all very, very excited. Okay, first up, we're going to begin with the E-minis. And they opened up. They're still up, but about flat now with a potential bearish reversal bar. So let's do what we normally do. Let's lay out boundaries that we need to see cross to make a determination of where to from here. You can tell this is very, very thin volume. And frankly, that's consistent with what we saw last week in the regular hours trade. Really thin volume last week. Let's go to the NQ. We do have a new Fed week ahead of us. We'll be answering the question, does the Federal Reserve cut rates? My members already know. We are now in the second 5-minute bar. And we have a new bar opened up. No new 5-minute lower low here, but very similar bearish reversal candle as to what we saw on the E-minis. Now we have a new lower bar. Oh, I screwed that one up. Volume is very, very thin. Let's check in with the small caps. Small caps are up fractionally. Same price action here. They were gapped up. And now we're seeing a bit of a fade off the highs. The small caps have been in fuego of late. Let's say hello to folks. Mr. Pete, welcome. Tim, welcome. Denny, hey, brother. Corey, where you been? Haven't seen you in a while. Good to have you. Miser, welcome. Okay, I know. No worries, no worries. Mr. Sean, welcome. Polish Taco, haven't seen you in a while either. Welcome. Okay, let's continue on. I want to go to currencies. The dollar had a very poor week last week. Here's the weekly view. You can see on the week where we bounced off the lower band of support on the dollar. And the dollar, this is a 15-minute chart, reversal bar. So we're seeing a little bit of a bid on the dollar. Now, this matters for the Japanese yen carry trade. Let's continue with currencies. Let's go to the euro. Euro down. Let's go to the weekly chart. Could be a dead cat bounce. Japanese yen. An up week last week. Okay, so Japanese yen in the infancy stages of a potential recovery. Let's stick with currencies. Let's go over to crypto. Bitcoin catching a bid here, up just over 1/4 percentage point. XRP, 0.15%. Let's check in with gold. Gold trading down here. Big reversal bar on Friday. Trading down at current. But we are breaking out of a 15-minute downtrend channel, which to us means nothing because we're not day traders. So really doesn't matter much to me. Let's check in with silver. Silver down after hitting all-time highs last week. Very powerful week on silver. Let's go back. Jody, welcome. The lovely Jody. Gotcha. Well, it's good to have you. Hey, TF Hatter, welcome. Chat. Thank you, sir. Appreciate that. And hit the like. Yes, hit the like button, please. I'd appreciate that. Like, subscribe, all that good stuff. All right, let's go to energy. Natural gas gapping down here. I think that this is an opportunity. I mean, the weekly chart of natural gas, I mean, it had a rip your face off rally on Friday. This is pretty. So at current, we have a gap down. So here's a Bollinger Band squeeze that fired off, resulting in this big rally. So natural gas, I think this is an opportunity to step in here and nibble. Again, nice reversal bar, 15-minute candlestick. Let's check in with oil. Oil opening up here. I think the bottom is in for oil. You saw the energy stocks break out last week. Very, very good price action. I'm trying to find gasoline. Well, check with home heating oil first. Home heating oil in Fuego. Last week, anyway. Here's a Bollinger Band squeeze setting up here on a weekly chart. Bollinger Bands inside the Keltner channels. That's very bullish. Very, very bullish. Where's that? RBOB. Here we go. That's what I want. I don't know why I can't remember that symbol. Looks like we're opening down here. So they gapped it up and they reversed it. So I think the bottom is in for gasoline as well. We had this rally. We had a pullback. Now I think that we're putting in a higher low. So unfortunately, this is not wonderful for the equity markets. We're going to talk a lot about that tonight, what's going on. Let's check in with corn prices. I was bullish last week. I remain bullish here. Wheat, no follow through, not as bullish. Soybeans, reversal week last week, so I would avoid for now, see what happens there. Live cattle. Live cattle broke out. I mentioned this last week that we may get a counter trend rally on live cattle. We got it. So last week, big short squeeze here. I think that we're going to probably get stuck at this 21 period EMA. If we close above it, we come up to these resistance levels. We're going to look to reestablish a short on live cattle. I think that this rally or this bull market, pardon the pun, is probably over. That does not mean there's not more upside here. So we'll watch, we'll wait, we'll look for that resistance level to get hit and a rejection. Then we'll look to reestablish a short on live cattle. But I would not short now. Did we do everything? We did not do bond yields. We're going to talk more about this. I'm not going to talk too much about this chart right now. I'm just going to tell you this with one word: ominous. Very, very ominous. Let's check in with volatility. Volatility opening down here. So I'm going to make a bold call here for volatility. And that is this. Even though this is a traditionally seasonally favorable period of time, I think that we're going to see volatility probably right after the Fed announcement on Wednesday. So those are the futures. We're essentially flat. As we near the Christmas holiday, you're going to see volume decline dramatically at some point in time. The computers are going to be put on, keep the market in check. Not a lot of volatility, unless, of course, some outside event occurs. But as we draw nearer to the 25th, 24th, you're going to see volume go like this, drop down. But that doesn't mean you're not going to have movement in the market. You go up and go down. Seasonality favors bulls, Santa Claus rally, but they're going to be able to manipulate the market on very, very light volume. So not all bull markets are made equal. Watch the volume. If they're limping it up 0.5%, a percentage point per day on declining up volume, that's a bull market that's on thin ice. You need volume. You need institutional accumulation. These very, very light up volume days, and you move in a stock or an index, 0.5%, a full percentage point, that's whistling past the graveyard if you're going to join in and invest for the long term, especially where valuations are at current. You just saw a spike in volatility. It's now flat. Somebody just came in and just put a buy order in on some front month VIX contracts and pushed it flat on the session. We'll have another alert set up here. We're going to be watching volatility very, very closely this week. So let's get to it. Okay, first up is going to be some news that was out. And I got an email on this as well asking for my opinion on it. So I did a little bit of research, and I have not been able to corroborate this article being accurate. This is behind a paywall, so I can't get to it. Former NY Fed repo guru Powell will announce $45 billion in bill purchases on Wednesday. Now, the question I got is twofold. One, is this for real? Two, is this the same as QE? So I want you to pay attention to $45 billion in bills. Bills are short-term paper, weeks to a year. So this is not the same as QE. It feels like it. It sounds like it. But QE is meant to bring down longer-term yields, not necessarily shorter-term yields. Now, the reason why this makes this all the more important right now is because the Federal Reserve, as of December 1, has stopped rolling off debt off of their balance sheet. They're stabilizing it now. Now, my opinion is that they're stabilizing it for liftoff. They're going to increase that balance sheet dramatically, but they need a reason. They need a reason. So right now, this is a bullish headline for equities. You can tell by the equity markets, they're not biting at it yet. And in reality, it's going to do nothing for longer-term yields. And that's the 800-pound gorilla in the room right now. How do they get long-term yields down? Market watch. Events coming out this week. Monday, nothing. Tuesday, NFIB small business optimism. That's an important number. Wednesday, we get some inflation data. I don't think we ever got the CPI or the PPI since it was the government shutdown. Employment cost index. This is an inflation read. FOMC rate decision. We know that's coming. We're going to talk about that more in a moment. This is where the action happens. What he says here matters quite a bit. So you remember the last press conference, Powell was fairly hawkish. He was concerned about inflation, but the equity market started going like this. And all of a sudden, they had to bring out one of their governors saying, oh, no, don't worry. We're going to make rate cuts. They're coming. And sure enough, we went from the probability of 30%, a little bit higher than that, 30% odds of a Fed rate cut, all the way back up to 87%. Go figure. So you could tell that they're not aligned at the Federal Reserve. And on Thursday, we're going to get the jobless claims. On Friday, more Fed heads come out, probably to do damage control, just in case Powell makes a faux pas, as they say. It's my word of the day, faux pas. Let's take a look at the probability of a Fed rate cut. Pretty much unchanged. They're gonna cut rates. Long story short, you're gonna see all these people on CNBC. Will they? Won't they? Will they? Won't? They're cutting rates. Guaranteed. As sure as God made green little apples, they're cutting rates. You read it here first. Fact. It's gonna happen. Now, what is interesting is the Federal Reserve's balance sheet. They really dumped a lot of treasuries onto the market, but that's going to be the last tranche of treasuries they sell for a very, very long time. You could have expirations, but they're not going to sell treasuries. So that's done. Powell made that announcement during the last press conference, and now you're going to see more stabilization in the bond market. Maybe, just maybe, because I'm going to go to a chart in a moment that is telling us that the bond market is concerned and yields are about to break out. The question is, why? Why would they want to break out? We have Fed rate cuts coming. Why would they want to break out? Well, I'll bring you back to the Atlanta Federal Reserve's own numbers. They said that Q3 growth, GDP growth, was nearly 4%. Then why do we need a rate cut? Also, when you take a look at this tweet, U.S. oil breaks out. True. Copper breaks out. True. Natural gas, this is a little bit hyperbolic. It didn't go parabolic. It had a nice up week last week. Inflation under control, obviously mocking the Federal Reserve's interpretation of what is acceptable. They used to say it's 2%. Now they're apparently saying, all right, whatever, 3% is good, 2.7 is good. So they're very, very fluid. The Fed started cutting rates to September 2024 with the 30-year yield below 4%. They've cut 150 basis points, and the 30-year is at 4.8%. Think about that. The Federal Reserve has already cut by 1.5%, the overnight rate. It's not unusual for long-term bond yields to move up immediately thereafter, but they come down after a month, 2 months or so, and they align with the shorter-term yields. They'll go down in trend because the Federal Reserve is doing their job and cutting rates. The problem is that this time around, that's not happening. The Fed may be done with inflation, but inflation isn't done with the Fed. I'm going to read that again. The Fed may be done with inflation, but inflation isn't done with the Fed. So how can we validate that statement? How can we do that? Simple. All we need to do is look at the charts. And I want to leave off with this because he's validating what I've been saying now for weeks. If long-term yields keep rising, they won't admit a policy mistake. They'll just bring back QE. This is exactly what I have been saying for months now. They cut rates, longer-term yields went up. How do they combat that? Well, quantitative easing. They're going to take this balance sheet, which they reduced, and they are going to blow it all the way back up again, way beyond where we were at the peak. Why? The law of diminishing returns. They need to go bigger every single time. You go back with all the QE programs that we've had, every single time they had to do vastly more quantitative easing than the prior time. Why? It's the law of diminishing returns. Simple as that. So let's do some validation here. We know that the 10-year yield is at the precipice of a breakout. Not only that, and I spoke about this with members on Market Wrap on Saturday, you already have a breakout on the RSI. RSI is already broken out. We broke out of this downtrend channel. We have a higher low. This wants to go up. You have a W formation on your slow stochastics, a momentum indicator. Right now, you have indicators leading price performance. It looks as though the 10-year is getting ready to break out while the Federal Reserve is poised to cut rates. What are they expecting in January? 91.5% probability of a cut in January. I don't want to go too far out here. Just out of curiosity, what they're doing in March. March is so far away. 94.3% probability of a cut. So the more they cut, the greater the probability of yields on the long end of the curve, 10-year, 20-year, 30-year spectrum are going up higher. The question is why? Why is this time different from all the other times? The reason is very simple. It was spelled out. The Fed may be done with inflation, but inflation isn't done with the Fed. The bond market's saying, this is nonsense. The bond market is calling BS on all of this. And so is the commodity market, copper. Look at this chart. I mean, this goes back to 1972, quarterly chart. We are in the precipice of breaking out to new all-time record highs. We're just off of all-time record highs. Oil broke out last week. Expect a check back. Expect follow through to the upside. Natural gas. Very nice week last week. 11% in a single week. 11%. So the more that these rate cuts become likely, the greater the probability of QE ramping up yet again. Now, that's going to be bullish. It's going to be very, very bullish for equity. So what's the strategy? Right now, we added more to our short position. We're just nibbling, because I finally got back in the gym today. I'm so dehydrated. Sorry. First time in the gym since surgery. And good workout, but pooped. So I forgot where I was. I just had a senior moment. So the greater probability of a quantitative easing program. So where I was going was that we added to shorts in anticipation of, if we get a breakout on the CRB commodity index, on oil, on copper, et cetera, you start seeing the commodity markets move up higher, the Federal Reserve cutting rates, and long-term yields go like this, that's going to spook the market. Because a reasonable person would say, well, if you have commodities that are rallying strong, then the probability of the Fed being able to cut rates goes down. And it's a possibility that they need to raise rates to fight inflation, but they're not there yet. Remember, the primary goal of the Federal Reserve is this. It wants to remain independent. Powell hates Trump. Trump hates Powell. But for him to secure the midterms, he's going to do exactly what he needs to do to maintain the independence of the Federal Reserve. Add to that in May, Powell's out. You're going to have a new guy in there. So in that space of time, and you get a little bit of confusion on the markets of whether or not the Federal Reserve is going to be able to cut rates anymore because inflation is going up, then you're going to get a correction in the stock market. And there is where we want to take advantage of the short side. I do not foresee that being a very long-term play whatsoever. If we get a 10, 15% correction, okay, that's fine. They're not going to let the stock market crash into the midterm elections, and that's less than a year away. So we need to think macro, not look at a chart and say, is this going to go up? You got to think macro. What's going on here? Also, what we want to do is that when there is blood in the streets, we want our laundry list of stocks that we like, because we want to begin buying, and buying aggressively when there's blood in the streets, just as we did with Lyondell Basel. That's a 12.75% yielder. That's a cyclical stock. When they begin quantitative easing, it reinflating this balance sheet, those cyclical names, manufacturing names, chemical names, they're just going to go through the ceiling. So we're buying them now in anticipation. We'll collect our dividend yield. The stocks aren't going to do much until QE begins, or the rumor of QE begins. But we're building positions now. UPS, now. Big dividend yielder. Cheap, historically. So that's the strategy right now. And yeah, we'll buy ETFs. We'll buy QQQ. We'll buy the Mag 7 names. But the Mag 7 names right now are not driving the market up higher. They're not. If you take a look, and I reviewed this on the week ahead commentary, it was not Mag 7 that was leading the charge on the triple Qs last week. It was the equal weighted names, the underperforming names that were driving the market up higher, or the Qs up higher. And yes, certain semi stocks did really, really well as well. Not the NVIDIAs of the world. Avago, Broadcom did very, very well. So we're going to have great buying opportunities available to us. And when we see that the Federal Reserve is getting ready to reinvigorate their balance sheet, then we want to get very, very long of this market and enjoy the next rip your face off rally in equities. Valuations. We're going into the new week at highs not seen since 2020. This is crazy where we're at right now. This is lunacy. The Buffett indicator, another validating tool for valuations, we remain strongly overvalued. And for those that need visuals, I don't know how big more of a story I could tell you about the overinflated value of this market at current than this chart here. So while typically a technician and I'll use charts to determine whether or not I want to get short, this time around, a lot of the whys behind building our short position is behind this ridiculous valuation. I mean, it's frankly bananas. What's the word? Ominous. Yes. Yes, it did in a very, very big way. Yeah. TF had a SoFi diluting. Okay, good information. Thanks for the share. Powell first nominated to the FOMC in 2012 by Barack Obama as a moderate Republican to balance the board. He later renominated chair. Thank you for that. OG1 Kenobi, how you been? Hey, buddy, I have TLT calls, 90 strike, March expiration. Given my opinion on, I'm assuming you're long those calls. You're not short the calls, right? Meaning you own them, you didn't sell them. I'm going to be honest with you here, and I've been when I don't have a good vibe for something, a good feel, and this is rare. I say it because I don't want to come off as one of those guys that knows it all. I don't. I would say tread very, very cautiously here, whether or not you're long or short those calls, because I think that there's a lot of reason for why yields should break out. So my short-term answer to you is no. I would not be bullish and wanting to own March calls on TLT. Even though your strike, which is 90, you're just out of the money. You're near the money, so that's not bad. But I would be nervous if you get a breakout on the 10-year yield. Actually, you really need to watch the 20-year, but the 20-year yield on TLT. But you could use the 10-year yield as well. And it appears as though the 10-year wants to break out. So that being said, the minute that the Federal Reserve plans on reinvigorating their balance sheet, inflating it, then you're going to want to own those calls. I don't think I would want to be long those calls now in anticipation of that event. I think you would want to see a washout in TLT on a weekly time frame. Watch for a couple of weeks where it stops going down, and then the rumor of Fed intervention in the bond market, buying bonds. That's when you want to be buying long dated calls. That would be my strategy there, or selling near-term puts at the money puts, trying to get a discounted price on the common. That would be what I would do. I would not be long of calls right now on TLT. And you can see here that while we've been building the right side of a base, and I'm not going to deny that, and this is why I'm saying it's hard for me to get a vibe on either TLT or yields right now because neither of them are breaking out. They're not breaking down anymore. So right now you have a major tug of war going on in the bond market, and whichever one wins, it's going to be a rip your face off move. You're probably going to see on the 10-year a 5-handle very, very quickly on a breakout, especially if Powell is dovish. If he comes out somewhat hawkish, equities will not like that. The bond market will listen. That will bode well for your trade on the TLT. However, if he comes out dovish, you're going to see TLT drop. You're going to see long-term bond yields go up. Why? Because we have too much inflation, and he's not doing anything about it. Now, if he mentions QE, then you want to be long those bonds, those options. If he starts talking about QE, buying long-dated maturities, 10-year, 20-year, 30-year, mortgage-backed securities, then you want to own that paper. Okay? So that's my take. Right now, we're just watching to see what happens. You had the 10-year yield, which has been in a long-term consolidation. To me, this looks bullish. RSI, I've seen this 1,000 times. This is extremely bullish for yields. And with regard to TLT, what happened here? I don't like the weekly price action. We have a lower high and we broke to new lower lows. So that's kind of like a short-term top for me on TLT. That's my take. Hope that helped. I work at Lionel Basil. Company seems to be struggling since COVID. We sit idle more than we run product. Interesting. So did they not do well? Let's bring up the symbol. During QE? They got killed like everything else did, but they had a heck of a rally on that QE news and all the fiscal policy. So I think that the quantitative easing is going to help the company quite a bit. TLT, SPY, both are in head and shoulders formations, which is crazy. Interesting. Where are you from, out of curiosity? In the States? I think the president will need to bump housing so we eventually see the MBS buying spree. It's really the only way to get affordability up. The problem is that once they do that, once they begin buying back those mortgage-backed securities, the house prices are going to rip through the ceiling. So, in a way, the buying of the mortgage-backed securities increases inflation on housing. So yeah, the yields will come down, but the house prices are going to go up. So I think it's going to be, it may help some early on, but longer term, I don't know. I don't know how much value there's going to be there. I do think that they're going to make Fannie and Freddie more viable again, and they'll make some sort of they'll make housing more affordable through those vehicles. I know that's on the table. Chandler, Arizona. Gotcha. They blame lack of sales in plastics. I hope it helps. I'm doing. Oh, good for you. Good for you. Yeah. For those that don't understand why I'm interested in this company, it's because nobody else is interested except for Monty here, and that this stock is yielding. It's crazy. 12.64%. So even if the stock falls 5% more this year or next, you're still profitable on the dividend. So it's kind of a no-brainer, especially if you believe you're going to have quantitative easing. So LYB, FLNG, several other names that we own or plan on buying are going to be part of our brand new 7% dividend club. That's going to be a new value add for members as soon as I get the website launched. The new website, not the current one. Monty, stay in touch on what's going on there. Good stuff. All right. Let's do some. I'm assuming that the refinery side of the business is carrying us. I did not know they were into refining as well. All right. So let's do some chart requests. And we will call it a night. We log in here, see what we got. Folks, we're going to be using TrendSpider. Our friends over there, they provide us with a 35% discount to you. Use the link below. Head on over there. Take advantage of it. If you're not using TrendSpider, you're missing automated trend lines, back testing, scanning. What's Congress doing? What's going on? What's happening now? That's CFOs buying, CEOs buying their own stock, large out of the money put buying, congressional trading. There are companies out there that you have to pay big money to get this data. It's free. It's included. So take advantage of it. Use that link below on YouTube, link above on Twitter and on Facebook. And I give it away free to our silver and gold level members. When the new website launches, folks, prices are going up a lot. So, because we're going to be offering a lot more value. So lock in your prices now. Head on over. You have to deal with the construction work going on the website right now, but it'll pay off longer term. So head on over, get TrendSpider for free. All right. And by the way, the 14-day free trial offer is going away as well. That apparently is no longer a thing. So let's get to, and prices don't go up on existing members. All right. Patrick, I can't do 4. Irene, PYPL. Lemonade. I used to own that one. Should have held on to that. Sold that one too quick. I'll do your first 3 there. Okay. Let's get to it. IREN. Looks like I've gone over this one before. Well, the good news here is that it stopped going down. I think that you could begin bull operations here. But I wouldn't get too aggressive until we closed above 49.42. That's a breakout. And especially if we close above this pivot point here at, what price is this? Around 52.02. Those are your two immediate resistance levels. You want to scratch the itch here based upon the fact that we've stopped going down. We're holding a support level. Yes, we were down last week, and it was on volume. The thing is that we didn't make much in terms of price change with all of this volume. That tells me that you have a tug of war at that price level between bulls and bears. Daily chart. Not much happening here. We may just pull back and do another retest here. Tight stops on a close down below $40 a share. Not in love with it. You know, maybe something, maybe nothing. Let's check out seasonality. Not a good time of the year to buy. This is the worst month out of the year for, this is only 4 years worth of data. There's not enough data here to use seasonality. So forget that. Scratch it. So I'm kind of ambiguous on the stock. You're welcome, Tim. PYPL. Let's go with the weekly view as we always do. The trend is still down here. And we broke support. This is the value of the automated trend lines. We broke support the week of November the 10th. Check back 1, check back 2, check back 3. I think this could break down further. When am I wrong? We need to close back above $64 a share. You can see we're getting rejected at resistance. RSI is building strength here, building momentum. Nothing happening here with seasonality. So I'm not loving PayPal at all. LMND. Lemonade. MND. Jesus Christ. I don't know why that's so difficult. Bullish. Absolutely bullish. So here was again, the value of the automated trend lines. Click of a button. Boom. So here is your upper band of the rising uptrend channel. We hit it here in November, or the week of November the 3rd. Again, the week of the 10th of November, consolidated. Now what are we doing? We are breaking out. There you have it. You're probably going to get a check back down to $75.81 per share. I would scratch the itch, and then I would be a buyer and add more on a close above $80.50. Daily view. Nice consolidation. The stock wants to go up. I own this in the 30s. I sold it. Son of a bitch. Seasonality. There's only 5 years worth of data here. Poet. That's a new one. Poet Technologies. Weekly view. Looks like a dead cat bounce to me. You know, maybe there's something here. Got stuck at a Fibonacci retracement level last week. I would think it was more interesting if we close above $6.34 and or we see a pullback to $5.51. Then I would look for consolidation, and then I would look to nibble. I don't see a reason to go buying here unless you think this stock is going to go parabolic, which for all I know it may. I don't know this company whatsoever. Volume last week was very, very good. Let's go to the daily chart. It looked like there was a news event here. Guessing. You're going to have a lot of overhead supply at $7.65. So just be forewarned. You have more potential upside here, but you're going to have a ton of overhead supply above. So please be careful. Soundhound. I was extremely bullish on the stock. I have not been so of late. Is your lower high. You have resistance immediately above. Doesn't mean it can't break out. Just be forewarned that there's going to be overhead supply. We are in a downtrend channel. I just don't see a setup here that makes me feel comfortable. Now, you show me a couple of weeks of bottoming action, and I would get excited. You show me a breakout and then a recheck, then I get excited. Right now, we're hoping that it breaks through a resistance level. Hope is not a strategy, so I wouldn't hope right now for a bounce back. You may get it. Seasonality, there's probably way too little data here. Yeah, there's only 4 years worth of data. And we'll leave it off with BBAI. This one looks interesting. So this one broke support, failed to recapture, but last week it recaptured support. To me, that is interesting. We have higher lows on price. This is a consolidation. Up volume last week was very, very good. RSI back above 50. You have a W formation here. Daily view. This is what I always talk about. Breakout and check back. This is bullish. I would scratch the itch here. Small opening position. I would add more on a breakout through $7.17 and especially a close there. Then 747. And then this is the big resistance level up here at around between $9 and $8.65 per share. Last one up is going to be FISV. Now, this stock is a financial services company, and it's been left for dead. But it has stopped going down. RSI hooking up, good volume. We recaptured support. I'm a buyer here. Especially if you have a high short interest. I would check Yahoo Finance. I take a look at, have a great evening, Franklin, and a profitable one. I would take a look at Yahoo Finance. I would take the 3-month moving average daily volume and divide that into the total number of shares short. And if you get 3 or 4 days of short covering potential, I would be all the more inclined to get more bullish here speculatively. You know, the fundamentals are visible on a chart. They're not good. So I don't know what's going on inside the company, but it looks as though this is setting up for a rally. And we'll check in with seasonality. 30 years, 32 years worth of data here. And this has been all wrong this year. Maybe that changes in 2026. That's it, folks. Have a great night. I will talk to you tomorrow. Have a profitable trading week. Like, subscribe. Don't forget TrendSpider. 35% off. Link below on YouTube. Link above Facebook and Twitter. Have a great night.